Hope you enjoy it. In the end, I think we might maybe do a little bit overrun, but I'll try to limit within 1 hour and 15 minutes. So yeah, I think we're about to begin now. So let's just start. Okay. Hey, what's up, guys? What's up, our valuable Huobi users? Welcome to this special episode dedicated to the annual report published by Huobi Research. And today we have invited a wide range of guests from a very, I would say, rich and diverse background. And I'm very excited to host this AMA, and we're going to have some great conversation. So I would like to introduce me and my host, Benz. Hey, Benz, how are you doing?
Hi, Johnny. Thanks for having me tonight. Just to give a brief introduction of myself. I'm in Huobi for 2 years right now. Previously from a traditional finance background as a buy-side research analyst. So mostly in the equity research. And yeah, that's a quick introduction of myself. Yeah,
definitely clear. And I'm Johnny, and me and Benz will host a conversation throughout the AMA, and then I would like to introduce our guests first. And Paul, hey, how are you doing, Paul?
Hey, thank you for having me here, guys. Really excited.
Yeah.
To introduce myself, my name is Paul Kremski. I run business development for Cumberland DRW. Cumberland is an OTC trading firm. We provide institutional liquidity that is deep, persistent, and consistent. We are a 24/7 desk, and our counterparties trade with us via chat, via our single dealer platform, and via API.
Thank you, Paul. I think Paul will later on give us some very special opinion from his special background from the buy side and also sell side institution. And yeah, looking forward to that. And Anson, how are you doing, Anson?
Hi, thanks for having me. My name is Anson Zeal. I'm good, thanks. I'm the Chair Emeritus of IDEXA. It's a international trade body of different associations: Crypto Valley Switzerland, Blockchain New Zealand, many different Crypto UK, and many around the world. And we host the annual V20 event at the G20 Summit every year to talk about regulation. We brought FATF and Financial Action Task Force for Financial Stability Board to meet with the different large crypto exchanges.
Thanks, Anson. Regulation has been a very controversial issue, and we're going to tap into that later on. And Louisa, how are you doing, Louisa?
Good. Thanks for having me. So hi, everyone. My name is Louisa. I'm from Nansen. So Nansen, we are a blockchain analytics platform. And what we do is we try to surface the signal better for our users and help them navigate this market. Thanks.
Thanks, Louisa. I think a lot of traders have been using Nansen, and that's a very great platform, data provider. Yeah, credit to that. And yeah. Hey, Summer, how are you doing, Summer?
Yeah, hi. How's it going?
Hi. I'm good.
Yeah, my name's Samar. Thanks for having me over. I'm the head of APAC at Talos. For those who don't know, Talos is a B2B software as a service company. We provide a trading platform to institutional investors on the buy side and the sell side. We're the largest provider of this software with, billions of US dollars flowing through our pipes on a weekly basis. So we have a unique vantage point on what institutions are doing when they trade. If you are, just to get an understanding of what we do, if you're a crypto fund or a hedge fund and you want to work with, let's say, 2 custodians and 10 liquidity providers, liquidity provider could be an OTC like Cumberland or an exchange like Huobi. You use our software to orchestrate all these relationships. You can do liquidity aggregation, run execution algos that you are normally used to from FX and equities. And you can do this all from one gateway. So you can reduce your trading fees and eliminate single counterparty risk.
Thanks, Summer. Yeah, that's very cool. And I think Summer will later on give us some special opinion from the buy side and sell side institution. And also, I think Summer will have a very good overview of how institutions are diving into Web3. That will be, I think we're gonna tap into that discussion later. Yeah. Hey, Isaac. Isaac, can you hear me?
Guys, how are you? I'm head of DeFi at Wimix. Wimix is a gaming-focused blockchain, layer 1 mainnet. We're EVM compatible. We have three distinct platforms that we operate. We have Wemix Play, which currently supports 21 blockchain games. They're live. I would say it's a blockchain version of Steam. We have Nile, which is an NFT marketplace and a launcher for DAO. And the DAO Launchpad is coming live in a few days. And we also have Wemix Fi, which is what I built. It's essentially the financial tools for gamers. So we're doing a lot of interesting stuff, bringing credit market to gamers as well. Yeah.
Yep. Thank you, Isaac. And can't wait to discussing GameFi with you later on. And today we are proposing 4 different topics, and we're going to discuss openly. And that will be a macroeconomy and also macro crypto. And we're going to go through some institutional adoption in 2022. GameFi, Metaverse, also some interesting topics that we will go through later on. DeFi and also stablecoin, CBDC, and 2023 crypto projection. Yeah, we'll be doing these topics later on. And during that, we would like to mention our findings and also insights from the Huobi Research Annual Report. So make sure, stay tuned. So Benz will take over on the first section about macroeconomy.
Yeah, sure. Let me touch a little bit on the macroeconomy side. So like for the past 1 year, with equities, almost risky assets has been like, I would say a bumpy road. And I would say that mostly it's because of the rising interest rates from the US side. And, sorry, Paul would like to talk about some macroeconomy relations to like crypto markets, because a lot of people has been like contribute like recent crypto winter. A lot of people has been like saying macroeconomy has been one of the biggest contributor to the crypto winter.
Yeah, actually, I think one of the biggest contributors to the crypto winter was the crypto summer. To really understand what happened in 2022, you have to look at what happened in 2021. And that was a really good year for the market. Everything across the board was up, and even if it wasn't that intelligent, you probably did really well in it. And in fact, some of the people that did the best in 2021, almost by definition, they were the ones with the least risk controls and generally behaving the most recklessly. If you look at who did the best this year, it actually looks a lot like a map of the firms that ended up not making it through 2022. And so you look at the beginning of this year of 2022 and you say, okay, these are the firms that were reckless in 2021, extremely aggressive, and they have the largest balance sheet in the market. They have the largest soapboxes. When they talk, everyone is listening because everyone thinks they're the smartest people in the room. They actually have just been taking the most risk. So that actually led a lot of people to follow them. And it led a lot of people to think that their credit risk was a lot better than it was. And it created these real systematic risks in the market. Anytime you have firms systematically ignoring their proper risk controls, you're going to have bad results. And it's only a matter of time. In this case, in the case of the universe that we're living in, it was Luna UST, which kind of caused the crash or triggered the crash. But really, that was just the thing that happened here, right? It could have been anything. If it wasn't that, it was going to be something else. Once that happened, you really saw the dominoes start to fall. And that's how we got where we are now. I mean, I think even the events of the past month were really begun this summer, but really they were begun in 2021 with really, really aggressive, reckless strategies. So that's how 2021 led to 2022. Now, how is 2022 going to lead to 2023, right? The firms that are left in this space and that are well positioned in this space are actually the opposite ones. They're the ones that have been taking very conservative, very responsible risk views of the market. And so the firms that I think are going to be active next year are the ones who are going to have a much more reasoned, much more deliberate approach to this market. And I think that will make the entire market a lot more resilient.
Yeah, I very agree with the insight that you just brought up. That's just a natural selection process, right? The reckless guys get wrecked. Yeah. And one of the things I think that in 2021, the risk was not exposed in 2021 due to everyone knows that the Fed printing trillions of dollars and then inflating assets. However, when they stop doing that, when they start quantitative tightening, raising interest rates, increasing the reverse repo levels, attracting the money from the market to the Fed, and then things gonna turn ugly, just like what you said, risk exposed. And then the guy who were reckless, just like I would say Zhuju maybe, and also SBF, Alameda Research, get wrecked. And now the survival of the fittest plays. And then, the guys with reasonable strategies and also good risk management, they're gonna stay. And that's a very great point. We're gonna agree with that. Yeah.
Yeah. There's the famous quote that when the tide goes out, you see who's been swimming without their bathing suits. It turns out a lot of people were swimming out without their bathing suits in 2022.
Cool. Vince, would you like to go on with the discussion?
Yeah, sure. So I also one question regarding institutions involvement with digital assets, because all kinds of different kinds of assets has been also on the downturn. Like, is there any strategies that you have seen what they have been doing if in terms of reallocating to fixed incomes, or are they institutions coming back to crypto? Samar, would you like to share this some insights on that?
Yeah, so sure, happy to share a little bit, and then maybe even Paul can jump in. But in terms of institutionals, we have customers on the buy side and the sell side, and they're currently doing different things, right? So, and they're involved at various levels. So on the buy side, we have the crypto funds, we have systematic funds, and the algo funds. Many of them are trading the volatility, or they're delta neutral. We have the traditional hedge funds who are sometimes directional. And then we have the asset managers who are often long-term value investing. Maybe they're just running some funds. And what I kind of see happening on the Talos side is that, first of all, the asset managers who everyone was excited about coming into the market, I think they're going to be waiting on the sidelines for a bit longer, looking for and their large assets and their large flows. They're going to be looking for more regulation. And unless there's volatility to trade, a lot of these other buy-side firms have been a little bit quiet, and volumes have gone down. That's what we've seen on our platform. Having said that, we still do onboard certain funds who are running their delta neutral strategies. And on top of that, on the sell side, we're seeing really, really remarkable green shoots, because we've been onboarding quite a few firms on the sell side. By the sell side, I mean Wall Street banks, brokers, fintechs, e-trading platforms. It seems to me like what's happening now is that they're looking at the market downturn as a good time to build, because they missed out on the last growth wave. And their long-term views on the potential of digital assets hasn't changed. And so you've got all these Wall Street banks making these big announcements about, we're setting up this digital asset division. We're going to launch custody and trading soon. We're going to hire permanent staff. And so based on this view, we believe we're seeing a lot of people on the sell side building and getting their products up and running for that next growth spurt. So there is a mixed view of some less volumes, which is disappointing, slowing down on the buy side, and then on the sell side we've seen this uptick. I don't know, Paul, if you want to add anything.
No, I love what you said, and I actually want to double click on something you mentioned there, which is that firms on the sell side. I can only speak for ourselves, but during this downturn, we've been doing the exact same thing that we did during the upturn, and that is build, right? That is what we were doing consistently, whether it's up or down, left or right. Usually it goes right. During this most recent period, we launched our incubator, Cumberland Labs, and in addition to incubating companies from the outside, they're also incubating companies from within. And a great example that I like to use is our traders were sitting there, and they were trading on centralized exchanges as well as decentralized exchanges. And every single time they wanted to trade on a new decentralized exchange, they had to program to a new API. And it's doing very similar work again and again and again. And they said, this is a terrible experience, right? There should be a single API that I can connect to that's going to let me access a lot of these different DeFi platforms, whether it's to read data or also to send trades. And so we built it. right? That is like a very valuable resource, having these traders who are telling you what they want to be built. And so Cumberland Labs built this product. It's called Expand Network. It connects to Ethereum, other EVM chains, non-EVM chains, connects us to DEX, lending platforms, yield aggregators. And in the past, we would have been like, great, we have a new trading tool. This is something our traders want to use. Let's use it. Happy alpha. In this stage, we're viewing our role as being a little bit more central to the market, a little bit more important that we actually act as builders here. And so now, unlike anything we've done in the past, this is going to be a product that we actually open up. It's going to be its own standalone product. Other companies can connect to the API and access all of these different decentralized exchanges, yield aggregators, lending platforms. And we're really excited about it because we figure that if our traders want this, if it's a valuable product for our traders, it's going to be valuable for other traders out there as well.
Another thing that I would just add, Johnny, just to wrap up, is that we've seen a little bit of a reckoning where customers have or institutional investors have some learnings from this recent market downturn, right? Where they realize, look, I need to make sure I'm not leaving assets on exchange. I'm actually using either self-custody or a qualified third-party custodian, and I need to diversify my liquidity venues, right? I can't just trade as a one-stop shop with one venue doing everything for me. So we've seen a lot of customers that previously passed on Talos coming back to us and saying, listen, we're not going to go with a one-stop shop. We're actually going to trade the market, face the market like grown-ups do in FX and equities. And so we need your software to help us orchestrate all these different relationships with all these LPs so we can aggregate their liquidity and get best execution. And so that's another thing that we've noticed.
Okay, thanks a lot, Simon. So one more question is, because you mentioned that a lot of customers coming to Talos using your software. So in terms of like institutions, are there like big barriers to entry or things that big takes that they take note of in terms of like trading digital assets?
Yeah, thanks for asking, Benz. So let me give you some background. I think that the ecosystem has come a really, really long way from where it was even 4 years ago. So let's say 4 years ago, you were a big institution, like maybe you're a hedge fund, and you want to work with this asset class. There were massive concerns. You're thinking, okay, first of all, am I allowed to work with this asset class, or is the regulator going to come down on me? You're going to say, how do I safe keep these assets and move them since they're on blockchains and there are no CSDs? This is a new technology. That's the custody piece. How do I do the AML or the KYT on coins or digital assets that get sent to me? How do I connect to all these new liquidity venues to trade? And that's the part that Talos solves. How do I do my tax? How do I do my risk management? Institutions were basically felt like they were starting from zero because none of the old institutions or market participants that they were connected to work for this new asset class. And so what I would say is today, many of these problems are solved. There are really great infrastructure providers out there that are solving all those pieces of the puzzle that I mentioned, right? For custody, you've got self-custody and qualified custodians. For trading, you've got Talos. For liquidity, you've got OTCs like Cumberland, you've got exchanges like Huobi and all the others. And all these building blocks are solved. For KYC, you've got Chainalysis, Elliptic, etc. And so right now, on the regulatory side, that's one of the last blockers, right? So regulators are legislating at different speeds in different markets. In APAC, we're lucky that there are licensing pathways in Singapore, Hong Kong, etc. But I would say that there are still a few barriers that we need to solve collectively around risk management. How do we, we've seen from the recent debacle that credit risk hasn't been done properly, counterparty risk hasn't been done properly. So how do we solve those pieces as well so that institutions with their large flows can confidently come in and say, yes, this ecosystem can support our volumes. We're not going to lose our money on a one-off incident.
Thank you very much.
Yeah, thanks, Samar. I cannot agree with you. And we also think that in order for capital to flow in again, just like 2020, what we are thinking about is more positive regulation coming over and providing proper guidance, just like what the Hong Kong government, also Singapore, has been doing in the past months, being open to encouraging companies, institutions adopt crypto and blockchain in the area, and that will be a major thing that institutions would like to consider when it comes to establishing their business on top of that. Yeah, thanks, Summer. So I think tonight we're gonna have a very important announcement for the FOMC meeting, right? Because they're deciding, the 25 or 50 basis points, maybe 75, I don't know, but probably the consensus is inclined towards 50. And I wonder what your views on the current, the macro economy. Are they going to initiate the first phase of the Fed pivot? They're going to slow down the rate hikes, and then we're going to sustain there for a period of time. Yeah, what's your view on this thing, man?
Because currently, the market is pricing like 80%, 50 basis points hike, and 20% for 75 basis point. So given that the CPI data yesterday was better than expected, so I think for the past 1 to 2 weeks, a lot of traders or market participants has been trying to be more bearish, I would say, because data were good, unemployment data were good. So they think that the Feds have some more bullets to actually raise more interest rates. And one of the Fed's KPI is definitely inflation. So inflation is good. So the market participants may think that maybe it's the time for inflation to actually slowly come down. Hence, the Feds would actually give more breathing room for the market for a 50 basis point hike after like 75 basis points hike. So I think it gives some risky assets more breathing room for the next maybe 1 month. Yeah.
See, thanks, Spence. And just like I want to respond to Paul, because Paul just said that the institutions actually are now very quiet and willing to buy the bottom, right? And yeah, and that's also another interesting point that I want to discuss. For evaluating the bottom in the crypto, because we're now seeing very low volatility. And what do you think about the low volatility, and also where the capital is going to come from later on?
Yeah, I think that we're certainly seeing low volatility right now, and frankly, you would really expect to see that in December normally, but obviously we had a pretty special November. And we've typically seen this. We've had 3 distinct shocks to the market this year, and after 2 of them, after the first 2, we did see quiet periods immediately after. The market is recovering. People, November was a really long year. People are exhausted after that November. I think it will be challenging for vols to stay this low because of exactly what Ben said. We are starting to see CPIs come off. We are starting to see the US Fed pivot towards lower rates. And actually what the Fed funds curve is showing us is that most traders are actually expecting rates to move back lower sometime next year. And the Fed has not corrected them on that. Normally, if the curve was showing that and the Fed doesn't think that's what's going to happen, they'll let the market know. And they're actually indicating that that's quite likely. So I think, most of the overhang in crypto has been realized. Most of the sellers for the past 6 weeks have been forced sellers. That's the flow you always want to look for. And it's exceptionally hard to predict a low. And there are still events that could lead to more forced sellers. But in general, when you're trying to identify a low, that's what you're looking for. You're looking for people who really did not want to sell, but they had to. For example, when companies are going into bankruptcy, typically what they do is they sell everything that's not nailed down before they go into bankruptcy. And I think that's what we've seen here. So that is a lot of selling flow that has hit the market. At the same time, for example, with Ethereum, you don't even have that miner flow coming into the market anymore because it's net neutral in terms of inflation. So I think once we kind of come out of this shock, which FTX has brought to the market, it does make sense that we'll see a couple of weeks of low volatility, especially it's December 14th. So low volatility is somewhat expected. But I do think that we could see things start to pick up pretty well. especially if you're getting macro backwinds.
Thanks, Paul. And I'm kind of interested to to see on the DeFi side, how's DeFi activities going these days, and same low volatility and less trading activities going on in DeFi, right?
Yeah, so I think the Huobi report also did mention that. So we do see there is definitely a drop in activity. I think people are quite cautious, but we also see interest in sort of more decentralized protocol picking up based on on-chain data. Yeah, not sure if Benz or Anson would like to add to that.
Yeah, very cool.
I may not be the right person to comment on the DeFi data points. Benz, you would like to comment on that?
Yeah, actually, I can touch a little bit on that because recently I've been looking at some DeFi activities as well. Ever since like the FTX debacle, we see a lot of users, they transit from the centralized exchange to decentralized exchange. So the tweeters, you see like not your keys, not your coins. So that's where hot wallets or even some warm wallets are actually projects are actually become more popular nowadays after FTX, where users starts to try to move towards self-custody, like Samar mentioned earlier. A lot of I think institutional investors as well, they are trying to do that. Hence, Telos is solutions from there as well. So I would say that recently after FTX, on-chain activities definitely has increased. However, and also it's towards the end of the year, so that's during the season holidays, there's very little activities everywhere. However, like Paul mentioned as well, November has been a very busy month as well. So I think December will be very quiet. And for the macro side, I also like to add in since CPI data is better than expected, so I don't think the Fed will do a crazy move to actually shock the market and let everybody have a better holidays. Yeah.
Hey, thanks, Franks. And I think let's move on to section 2, and we're going to discuss something about GameFi and Metaverse. In 2022, I think one of the most successful GameFi, I would say, is Step, and also back in 2021, that would be Access Infinity. So, with regards to these two protocols, I want to ask that what's your view on the success of Step and also the fall of its death spiral? Any thoughts about that, so our audience can learn something about it?
Yeah, I think the success of the STEPN, I think, has a lot to do with the fact that it's related to the activities that you normally do, and they incentivized it using very interesting components. So I think in a way, STEPN was a game, which means that users were able to kind of play it like Pokemon Go. And on top of that, you were able to earn money. So I think that was kind of it was cool, it was interesting, and you could make money on it. I think that was kind of the initial driver of STEPN. But at the end of the day, I think the token economics that STEPN introduced at first was pretty predatory to the holders. It didn't benefit the holders at all. STEPN made a lot of money. The early gamers made a lot of money, but it didn't really benefit the holders. So I think, and that goes same for Axie as well. Axie had it gave a lot of profits to early investors, the team, and early players. But at the end of the day, a lot of the people who invested, who started farming Axie as maybe a job, got hurt. And I think one of the reasons for that is that a lot of the token economics in crypto is, in a sense, not fairly distributed. It's very well tilted to the early adopters, and I think that's something that that we've also experienced as well. So we launched our flagship game Mirror 4 approximately on November 21st. We've seen 1.5 million concurrent users, 20 million users registered, and we've introduced dual token economics into our game. So the users were able to monetize their in-game time. So if you were good at playing game, you were able to make money by playing the game. And the price of these tokens also went down by a lot. And I think the industry as a whole, and definitely us, we have learned a lot from that experience.
Thanks, Isaac. I also agree with you on tokenomics of STEP, and you mentioned something about its tokenomics not being friendly to the initial to the people who join later, right? And some people also accuse of this model as a like Ponzi scheme alike, and that's interesting because is that how a Ponzi works in STEP? And what do you think about this accusation? For STEP being a Ponzi?
Well, I wouldn't call it a Ponzi. I think it's a very well-structured game, and the developers made a lot of money on it. Not on the tokens, on the fees. So I think they devised the business very well. It's just that I think the people had an illusion that holding the token itself gave you some rights. So what I see happen lately across the industry through this bear market is we're seeing a lot of the holders asking for rights. For example, Uniswap introduced the fee model for the token holders, and the holders are actively participating in governance to claim their rights. So I think that this is a trial and error for the industry as a whole, and we've learned that as well. So one of the perks that we introduced to our new releasing game that will come out next month is we've created a token economy where the gamers actually own the games. So if you own the tokens, if you own the token and if you stake it, you'll get a portion of the fees that we charge for the transactions within the game. So and portion of the transaction fees will be used to burn the token. So any RPG or any type of card games or any type of MMORPG games, the inflation of the in-game economics happen gradually. Now, if you introduce tokens, it pumps up really hard, and then it just dives down the cliff. So what we've been working, what I think we and also other game makers have been working towards is to find the fine line where you're able to incentivize the users to jump in, but then you want to prolong that status where everything is working fine. So you want to keep that status as long as you can. And the only way that we see that happening is by letting the players have a claim to the game itself.
Good to hear that you have a new game coming next month, and as for our audience, I think they will be interested about how are they getting incentivized to play the game, also try the game. How can they what are the special things about a game that our audience might some of our audience might want to try it out?
So the way our games are structured is that, so we made, and WeMix is a Web2 game development company that ventured into Web3. And one of our thesis is that all of our games, all of our platforms has to be service oriented, which means that we want to be as kind as we can to the users. And if you use a lot of dApps, they're not very kind to you. They're very difficult to use. And we want to minimize that friction. So the way we designed our games is that we didn't put the whole game onto the blockchain. We left a lot of the parts on Web2 servers, and we only integrated the asset portion of the blockchain into the game. So users are able to monetize their efforts in the game using the blockchain technology, but they don't have to interface with the difficult UX of blockchain. So we have a platform called wemixplay.com, which you can access. There's 21 live games, and you can go in and check each one of the games there. Some of the games have tokens, some of them don't. The ones that have token, if you actually play the game so a lot of our policies within the game has been to restrict bots. So we filtered a lot of harmful bots that actually take the lifeline of the game away, and we have integrated methods to help actual players to earn money within the game by providing value to another player. So if you look at how games are structured, there is a small percentage of players that spends a lot of money in the game, and then there's a large number of players that doesn't really spend in the game. Now, when we came into Web3, we've noticed the same thing happening. So a lot of the players that come into the game are here for the money. They're here to make money. But there's a very core number of players that actually spends a lot of money to the game, and they do that because it makes them it provides them with a status within the game. So that's one of the things that we kind of integrated into our token economics. So if you hold a certain number of tokens, you could kind of, for example, within Mirror 4, you can raise an army of players, and then you can go to war with other clans. So these are some of the interesting things that we've integrated in the token and the game itself.
Thanks, Isaac. Sounds interesting, the game. And, one thing I also agree with you is that some games, they have, difficult user experience. And also some of the games are not very, funny to play. And also some of our researchers also think that in order for the next X2Earn game to explode in the future, they're gonna first improve the user experience first. And that's one important thing that we think about in the GameFi. So yeah. Hey, Benz, would you like to take over on the DeFi discussion?
Okay, so as for moving on to DeFi discussions, so actually I'm very interested in how institutions invest in how they use DeFi as projects to trade, or do they just invest in DeFi projects itself? Somehow, would you like, Paul, would you like to take the question?
Yeah, there's a huge difference between the first time that an individual does a trade on a DEX and when the first trade you do at an institution. When you're doing it by yourself, you got your MetaMask, you open up the laptop, you try something, it doesn't work, you try again, it works, that's great, right? And then you're done. You've done your first trade. The path to doing your first trade when you're at an institution is a lot longer, necessarily so. There are a lot of different questions that have to be answered before you can do that first trade. And, when we, back in 2020, when we first started getting our feet wet in DeFi, I wrote a document that says, okay, here's how we do our first trade in DeFi. We're going to lend some USDC to Compound, right? Really fancy. And the guide that I put together, like this, here are the steps that we need to do in order to do this first trade, was about 20 pages long, right? You have to figure out, how are we going to book this? Who are we trading with? How are we doing KYC on this pool? How will we make sure that risk limits are in place? How do we execute? Who executes? All of these different steps that have to be figured out when you're at an institution, when really, if it's just you sitting at home, you say, okay, click. So we had to figure this stuff out for ourselves because it was 2020. Now in 2022, as Samar was saying, there is infrastructure that makes it a lot easier. There are still things that have to be figured out, but the road is a lot shorter thanks to institutional products like Talos, like Expand, like 1inch, etc. So there are a lot of products that make this a lot easier, but it's still very daunting to do those first trades in DeFi. Even once you've gotten your feet wet in crypto in the first place.
Yeah, I mean, I would just add to, so I agree with what Paul said. I would just add to it that institutions are very interested, right? Some of them are sophisticated and they can do their MetaMask and they can get onto a DEX like Uniswap and trade. They're interested in yield farming, lending and borrowing, these exciting new investment products, right? And in general, DeFi is a powerful idea. I think we can all agree. The ability to remove really all these middlemen is amazing. And many of these ideas have proven that they work really well, even in this recent downturn, right? You take lending and borrowing and collateral management, and these things have proven that they can work well. Having said that, I think DeFi is very difficult to regulate. Let's admit that right now. It threatens the idea of capital controls, central banks, nation states. And like Paul mentioned, it's very cumbersome and ugly to work with for institutions. And so there are many institutions that are very curious and want exposure, but they haven't figured out a pathway yet, right? And so that's why you have this kind of centralized model that's still there and still has a role to play. We have a hybrid where we're not really in a decentralized world, which is the promise of digital assets. We've kind of got this hybrid where it's a different version of the old world that's centralized. Which has some merit because large institutions will want to outsource some of their activities. They can't manage MetaMask wallets on their own. But you cannot have unregulated CeFi. I think we've all agreed that's not sustainable. And so what I'm excited about is seeing regulated CeFi, which will still have a role to play, moving into much more mature versions of DeFi, which we're all excited about. Institutional DeFi as well.
Thank you very much, Samar. And I think I got one more question. I can open up to everybody on this floor. So, ever since the FTX the vehicle, do you see any the rise of DeFi versus C5 or TripFi? Anyone like to take my question? What do you think of what's the step forward? Or is there a huge competition between DeFi and CeFi?
Yeah, look, I think that something Samar said earlier really resonates. Post FTX, traders are realizing that there is a value to being diversified in where they trade. I think that if you manage to get off of FTX and you took all of your funds and you moved it to another single centralized exchange, you're doing it wrong, right? There is a centralization risk there that is really unacceptable. And that goes for different types of trading as well. Ideally, you would want to have a mix of the capacity to trade on centralized exchanges, on decentralized exchanges, and I would really like to add OTC here. Samar was talking earlier about how in a lot of TradFi markets, FX in particular, most liquidity actually sits at these OTC hubs, right? And these OTC hubs become the trusted counterparties that are able to fill a lot of institutional trading. And then there are certain trades that you would want to do on exchange. But overall, a lot of the volume does move to these OTC hubs. And that's actually where the liquidity comes in, right? And then for a certain class of trades, for a certain class of traders, then the exchanges come in as well. But I think what we're starting to see after FTX is a real shift in how people view, okay, I have a single exchange account, I have everything I need. Not any longer. November was the most onboardings we've ever had. Again, we're not a retail platform. We are an institutional trading desk. And we had more onboardings in November than any 2 months this year. And that was a busy month for everyone, right? People were in general too busy to process onboarding, but they really prioritized it because there was this real push to say, okay, where am I going to get my liquidity from? And fortunately for us, we're an OTC desk that has been around for a long time, and we've managed to earn a lot of trust from the market.
Thank you very much, Paul. And next, and maybe a little bit on, I would say, a little bit sensitive part, which is the regulations. So anyone would like to take this question on whether any future with the current stablecoin markets and CBDC?
So I think I should chime in because I can at least add a little bit of value to the topic. So the media, some of the media has also come to me and saying, is the market being cracking down on right now in terms of regulation. My response is basically right now there's a lot of catch-up regulation that was not done because especially most exchanges and working with the regulators was mostly just on AML. And because we're working on all this, the focus was nothing on financial stability, nothing on governance. So finally, with an FTX that just blew up right before the papers need to be submitted for the Financial Stability Board, it's now actually a good time. So for other firms that survive, including yourselves, FTX blow up is a blessing in disguise, where everyone can now really, the ones that have people like Samar or people from like Paul that have been in the TradFi world coming in to actually strengthen the governance, knowing the experience from the TradFi grid coming in will be the ones that I see will survive in the headwinds, especially with regulation that's coming on. But what we're also fighting for when talking to regulators is cracking down is not the way. It's just the catch up that needs to be done that they have not been doing. And now it's going to happen. And the firms that will survive are the ones with better governance and processes.
Thanks, Anson. I also wonder, what's your view on the Tornado Cash regulation, the sanction? Because that is a very clear sign that the government does not support money laundering, and it's gonna do a lot of damage to DeFi as well. And yeah. So
I did a campaign when we were actually trying to get the V20 going to rally even if they're DeFi representatives talking as an alias, covering their face on Zoom with the real regulators, they were actually happy to do that, to speak to people representing DeFi. However, many after the Tornado Cash somehow did not want to come up to speak. I think it's important that the ones that want to speak should really contact the relevant associations or even us so we can link them up, because if there is a communication gap right now, the US Treasury will just continue doing what they're doing, putting the contracts onto OFAC, and until a certain pain point that reaches to a certain level for the DeFi ecosystem, then it won't be too late, but just that it will just keep on sanctioning. Why not come out just to speak? They are happy to not know who you are, so to speak, and just get the dialogue going. So right now, it's not at a good point. I think dialogue is needed for some of the representatives from DeFi. I'm not just going to put more addresses into the sanction list.
See, thanks, Anson. Thanks for the elaboration. So let's move on to NFT. And I think ApeCoin has been performing very well in the past week. And Louisa, do you have anything to comment on the ApeCoin, also other NFT related things?
Yeah, thanks. So I guess with ApeCoin, it's really because of the Bored Ape Yacht Club and also Mutant Ape Yacht Club brand. What we found in the current sort of bear market is blue chips are still they're still engaging with their communities, they're still adding value, and that sort of retains, I guess, their audience. In particular, we have seen the art blue chips actually performing quite well despite all the market volatility. So that was actually in some way not surprising. We kind of expected that because it sort of mimics what's going on in traditional market, where in times where there is when people are sort of a little bit more risk off, they try to look at alternative investment. But what we also see that's interesting in the NFT space now is that in the last cycle, I guess, what Paul sort of mentioned earlier, he put it very nicely, but I guess, in the NFT space, you can sort of see the more degen behavior of, people just buying and flipping. That behavior is changing a little bit more. And I guess what we're seeing is projects are really starting to have to think about how they can add value to the NFT holder or people who invest into their project. And I think that's why you can see more and more of them are actually taking advice from e-commerce space. How do they market that as a brand? I guess with Bored Ape, you can see merchandise, streetwear, for example, Doodles, they actually have also went into the merchandise space. But it's very interesting in terms of the innovation flow is both way, because on the other hand, you have traditional fashion brands, Lacoste, for example, Versace, and they're trying to enter into the NFT space. What we are seeing now based on on-chain data is we will likely reach a state where different regions or different community will see new ways of using NFT. So I guess one very, very hot topic, which earlier Isaac sort of talked about, was GameFi. So we're still seeing how developers are exploring the use of NFT in the game. Because one of the question is that we often hear about, and you also hear that with broader crypto application, and that is, does the project really need to be tokenized? And the same thing, does the in-game asset really need to be tokenized? And that's really for the developer to start, and the game designer to think about how that fits in with the game loop. Is it intuitive? Is there enough value sync? Is there enough incentive to actually invest in the NFT? Another element is people are, sort of thinking about theorizing it. Okay, can we introduce element of chance, for example, to make it more fun? So the whole idea of GameFi now, and you can see Axie Infinity also taking that approach is, it's gamified finance. It's making financialization more fun. But as a research analyst in the space, I guess one of the questions that I sort of think about is, a lot of time when people talk about NFT, they're almost convinced or have this strong conviction that, but it's about the ownership of asset. And I guess my question to the audience to think, and also I guess the panel here, is when we think about ownership to asset, are we thinking a very specific demography? Because if you think about Gen Z, do they really care about the ownership aspect? Perhaps that's one element, but I think what we're seeing, after in the future is probably the social element, and social as a status, as a and sort of status as a service will be more and more prominent in the space.
You talk about ownership. Oh, okay. Thanks. Go ahead, man.
Thanks a lot, Louisa. Actually, I got one question with regards to NFT. So a lot of artists, a lot of they are coming out and saying like NFTs needs more utility. What kind of utility are they looking at, or what are the utilities that we would foresee in the future for NFTs?
Yep. So at Nansen, we've actually tried to understand what they mean by that, because at the moment when we talk about NFT, we talk about them as though they are quite homogeneous. So we've actually created the NFT index that tries to track the market a little bit better and try to sort of acknowledge the different segments and layer of the NFT market. It's actually available free for all to view, the NFT index. So in there we identify a very strong social sector, social element, and that's your typical profile picture. And then you have access and membership that usually promise you some kind of, additional perks by holding the NFT. But what we also see the downside and the dangerous part of access and membership is people also use it as a fundraise mechanism. So they say, you're being promised of a future NFT or a future access to a game. And that's the part that, interestingly, we saw a lot of those projects prior to the downturn of the NFT space. We also see metaverse gaming projects that use NFT. Of course, we have art, generative art, but now we're also seeing more and more utilities like music. I think that is sort of a quiet one that we know is there, but no one's really making huge buzz, but it's building momentum. If you look at the amount of music NFT ecosystem that it's sort of building, it's emerging strongly. And then we see fashion brand coming in, and now people are also thinking, okay, how to use NFT as a way to tokenize other sort of assets. And you sort of see that with, I think at the moment that's trending on social media at the moment is around farmlands, for example. But I think those are still quite one-dimensional. I think at the moment what we're also seeing is you also see thought leaders coming together in the industry, and they're sort of talking about soulbound token. So are we able to capture, for example, wallet behavioral data in the form of NFT, and then it's up to the holder of that soulbound token in terms of how they want to use that data. So one way is thinking about, we don't have credit scoring, but the way you're interacting on your MetaMask, for example, all that data can be stored in the soulbound token. But if I'm not dumping on the community, for example, or I am a long-term holder, those kind of behavioral, does that mean I can be eligible, for example, for lower rate on DeFi lending platform? That's one way to think about it. Or if you think about the gaming space, if I'm interacting with all these games, the time I spend buying NFT, or if not improving the level of my NFT, can that also that data be captured in the form of soulbound token that will reward me better in a DAO structure or in the game. So those are some kind of added dimension sort of to the utility aspect of NFT.
To kind of add to that, one of the interesting things that we did with NFT into our games is that because we service an MMORPG game, so for example, like World of Warcraft, you're able to mint your character as an NFT and trade it. So NFT is binded to the character that you play within the game. And let's say that you put in a lot of time, money, and hours into the game. And at one day you want to, you were playing this this character and you want to play another. What you can do is you can sell your NFT, which is a character, and then you can purchase another one. So you're able to experience different categories of the game in a sense. And it also gives you a power to monetize your time and your skill. So one of the interesting things that we're experimenting with soulbound tokens is that we're trying to bind the gaming data of a player into that token. So we know how much he has played, we know how much he has earned from the game. And if you have those two data, I think we can possibly build a credit market based on the data there. So, some of the interesting applications that we'll be experimenting next year would be, we would try to create a credit market. So we would try to give these gamers based on how good they are at playing the game. And this would include how they would monetize the in-game items that they earned using the same game, using the same time. So for example, there's going to be, there's always going to be someone that plays the game better than you, and he's going to get a higher credit rating from one of our protocols, and he'll be able to borrow money that he could spend to towards his next game. So this has all become possible because of blockchain. And these are really early stages of companies like us, Web2 game developers, experimenting with the blockchain technology. And I think going forward would be super interesting.
Sounds pretty cool. With gamers who are good playing games, they get money from playing games. They even get loans, right? That's a whole new concept. I haven't heard about it. And are you going to do that next year? Is it in an experimental stage?
We're doing proof of concept right now. Okay. So probably maybe towards the later half of next year. If we do, I'll definitely share.
Okay, yeah, sure. I'm going to pay close attention to that. Very interesting. Okay, so moving on. Let's go to the last section, the future of 2023 crypto. I'm going to give our own opinions towards what crypto will look like in 2023. So I'm going to go first. I'm going to share some of my findings. So we're seeing the 4-year cycle coming to an end finally, and I'm being optimistic because we have seen capitulation lately, and it's 4-year cycle, and 2024 Bitcoin's going to do some halving. And what we're seeing now, I think, might be a early stage of bottom formation. And also, if we look at the realized loss, we also see a divergence here. Price dipped lower, but less money was lost in the market, and that's a good sign. And if the price dip once again, maybe to 13K or 40K, and then we see a smaller realized loss, and that means that sellers have already been flushed out of the market, and money is gone, and nobody's left to selling. Plus, with the low volatility, I think the bottom is in. I'm gonna hit the bottom. Yeah, to be honest. And also pay close attention to the reverse repo because it's been showing very strong positive correlation to Bitcoin and also other risky assets like SPX and also Nasdaq. And if reverse repo keeps going down, which means that money is leaving the Fed and it's coming back to other places, might be crypto, I don't know, but I hope it is. So yeah, this indicators that I think potentially maybe 2023 will be a historical, very good opportunity for people to act in. Yeah, just my opinion. Yeah, what do you guys think about 2023, man?
Yeah, so I started, I've been trading crypto for a while personally, but I've been with DRW for my whole career, and so I've been with this company for a long time. But I only moved over to Cumberland, which is the crypto side, almost exactly 5 years ago. And at the time, the price was almost exactly where it is right now. And a lot has changed in those 5 years. But I see a lot of comparisons between 2022 and 2018, right? Both of these years were coming after a really significant bull run. And so a lot of people are making the comparison, well, 2023 is going to be a very sideways market, similar to how 2019 was. And there are certainly some similarities between this bear cycle and what we saw in 2018, 2019. But I'm seeing there's one major difference, which I want to highlight. We saw a lot of people in 2018, the end of 2018, the beginning of 2019. We saw a lot of people leave crypto. See you guys later. I'm going back to trade rates. Like it was a nice little diversion, but it's over now. I'm not seeing that now at all. I'm not seeing people looking at this market and saying, I don't want to trade this anymore. I don't want to be a part of this anymore. Even people at some of the firms that haven't been successful and the people who lost their jobs, they're trying to find other jobs in the crypto ecosystem. The people who have come to the space want to stay here and they want to find a way to build and they want to find a way to add to the space. That is markedly different from what we saw in 2019. Even in the trading markets, which are fairly quiet right now, when there is a headline, the coin moves. That is not what you see in an apathetic market. Luis was talking about ApeCoin, which has had a really significant run because it enabled staking, right? In apathetic markets where no one cares, we just go tick for tick with equities. Bitcoin goes tick for tick with NASDAQ. ETH goes tick for tick with Bitcoin, and everything else like trades off that with a certain beta. That is not what we're seeing right now. We are seeing in a market where people are actively trading. People are still looking for things to do. People in this space are still engaged. They are not disillusioned. They want to stay in this market. And actually, that's like one of the most inspiring things that I can see, at least one of the most encouraging things.
Yeah, I mean, I can give you my views on how I'm looking at it from a slightly different lens. So I definitely feel there's still a bit of uncertainty on the structural integrity of some other companies. So we may see, maybe one or two more fallouts, which is really tough, but probably needed to get through this. I think the macro story will still be a little bit frustrating in 2023. I know we've talked about this a bit, but it remains to be seen what happens with all the layoffs and the war and things like that. It's going to make it tough to raise money, right? We've seen that already. But I think that businesses with sustainable business models and a strong product market fit will thrive. And then there's going to be some consolidation and acquisition opportunities. That's probably good for the consumer because there's less crappy companies and noise out there and more solid companies with solid products that customers want. And that's a good thing, right, for the next growth wave. And then I think at some point we will get a new growth wave. And in my view, when we have that iteration after a crash and a big learning opportunity, the ecosystem has always emerged stronger and better. Every time there's been a crash or a market downturn, it's for a different reason. And this is a new exciting asset class and a new technology. And so that's natural to have these growing pains. But like I said, the ecosystem always emerges stronger and better. And there will always be firms like ours that are trying to continue to professionalize the industry so that you have more institutional money coming in to stabilize it and grow it. That's my view.
Thanks, Summer. Thanks for the review. And maybe, yeah.
Yeah, I think on the gaming side, what we're seeing is so there was an event that a conference, a big gaming conference that we held in. It's held yearly in Busan, Korea. So a lot of the global gaming companies, large gaming companies come in and they exchange ideas. And one of the things that I witnessed was we were approached by large Web2 gaming developers across the globe to implement blockchain technology to their games. So one of the interesting discussions that we had was, a lot of the old gaming companies, they have a vast amount of interesting IPs that's just sitting around. Nobody's really playing the game, but they have a lot of fans. And, they've seen us kind of attract a lot of users using token as an incentive and building an economics model on top of the game. And they have, they've a lot of these companies has come to us asking for our advice on what to do with their current IP and what, how to build a strategy going forward. So, as I think one of the most interesting feature of blockchain is that it gives you ownership on the digital world. And I think that's rapidly happening within the gaming community. So I think people are waking up to the idea that, if you, for example, if you play the game and you own certain amount of assets in the game in itself, the blockchain technology could be the underlying infrastructure that could serve as a backbone that fires up an economy within the game. So I think going into 23, we're expecting to see a lot of large gaming companies across the globe experiment and possibly come out with some interesting games that actually uses crypto in a sense. So I think it's going to be super interesting from our point of view. And hopefully the asset prices could converge.
Thanks, Isaac. And I have a special question for Anson since you're from Hong Kong. And if you have been talking to the regulators, I don't know if you have or not, what's your prospect for, Hong Kong being the center of maybe the referee, comparing to Singapore as a competitor, the rivalry, and what do you think about?
Yeah. So, this is a very, very good question, especially now Hong Kong is, I won't say relaxed, now seeing opportunity that to open up a bit more, seeing how learning the lessons from what Singapore went through. So one of the main things I've been speaking to regulators about in Singapore is, unfortunately, they have been giving licenses too fast for the wrong companies and licensing the companies too slow for the right companies. And I hope there are some lessons learned here from the Hong Kong side of things. But obviously, the main headwind for Hong Kong would be if things suddenly go wrong, then China will have a very big say to decide what goes on there. Unlike Singapore, where it can decide its own future, Hong Kong still has, in a way, the big boss to really look up to. But I think it's good that Hong Kong's opening back up. So we'll see where it goes from there. And now there are lessons to learn from Singapore that they can use now. So to me, I'm quite optimistic of where Hong Kong is going.
Yeah, thanks, Anson. Thanks. So does anybody have any questions and anything else you want to talk about? I think that's a really good section, and we have had a wide range of views and opinions from different backgrounds. Sometimes it's hard to find a common ground to discuss because we're all from different views, and yeah, but it's also cool to learn different stuff like buy side, sell side things, and NFT regulation bills, and even the new GameFi model coming next year by Remix. And yeah, it's good to talk to you guys. Very interesting. Yeah. Also, thanks, Spence, for hosting. Yeah.
Yeah. Thanks, Paul, Louisa, Anson, Samar, and Isaac for coming, joining us here tonight. Really appreciate it because it's really rare for both Johnny and I to actually have a wide range of people from different industry or different parts of the crypto scene to actually join to have a different perspective of what's going on. So thank you very much.
Yeah, actually, I hope that in the future we can do a specific AMA for maybe each one of you. So we can have more in-depth discussions, so we don't have to go diverge, and that would be better.
Definitely.
Yeah. Anyway, good conversation. Yeah.
Guys,
thank you.
Thank you.
Thank you so much.
Thanks.
Thank you.
Bye.
Bye-bye.
Bye.
Bye.
Bye.